This is a journey into sound.
The fattest, funkiest tunes in town.
Now, here comes the music.
You got a beat for me?
This one's explosive.
Damn, son, where'd you find this?
All right. Okay. Hey, you guys. It's been a minute, but I am back. And I'm so excited to welcome you guys to the Stockhouse U Pre-Market Show. What is this show? The show is the same place you've known, you've come to know, you've come to love, we've come to love, and it's this little ritual that we do where we talk about the market. We do a lot of top-down analysis. We talk about the futures, indices, ETFs, individual stocks. We talk about news. Oh God, do we talk about news? We talk about our trades, both good and bad, and the psychology behind those trades. Now, we do not give out financial advice, nor do we condone people giving out financial advice. We will never tell you what to do with your money on this show, but we can tell you why we take the trades that we do and help you understand how we've made our way through the market. Now, if you want to talk, please raise your hand. Come up on stage. This is a fun family event for all, at all levels. If you love this conversation, hey, you guys, ping some more people into the room. Let's make this a movement. Let's make this a moment. They don't want us to win, but I think we're going to win anyways. Now, I'm joined by some of my favorite people. Vanessa, Liv, Christopher, Elle, Shivam, Daniel, Fahim, Alec, Patrick. Hey, Anne. Welcome to the stage.
Hi.
Now, normally we start our days off with a quote, and then after that, we'll get right into the futures. But I'd love to hear some quotes from you guys. I find this to be so motivational. So, let's see. Liv, do you have a quote for us today?
I do have a quote for you guys today. It's an oldie but a goodie, and I love it. Of course, as we all know, Warren Buffett says a lot of big things, but this one, time and time again, I refer back to it, which is, the market is an instrument to remove money from those who are patient. No, to remove from the impatient to the patient. I paraphrased it, but that's pretty much what I'm seeing right now, because we should just wait for confirmation and then see what the market does. Just be a little patient, and you might make a lot of money in the next coming days.
Yeah, patience is definitely a position. I love that. Vanessa, good morning. Do you have a quote for us today?
Yeah, my quote, it's simple, easy, and just relates to life and everything, but it's do what makes you happy. That's all I have to say. Just do what makes you happy. I'm done speaking.
I love that. I love that for you. Christopher, good morning. Do you have a quote for us today?
Good morning, and I do. We're going to Walter Anderson today. Um, this one just kind of hit home for me, and I hope it does the same for everybody else. It is only when we take chances, when our lives improve. The initial and the most difficult risk that we need to take is to become honest.
Wow, I love that. I don't have a quote today. I mean, I guess I do, but I also wanted to just address the title of the room really briefly, as it's just us friends here. I'm gonna start doing a show on Benzinga on Mondays. I might have more, but I think that's just where we're gonna start. At 6 p.m. Eastern. And so it's going to be kind of a combination of what we do now and also our aftermarket therapy sessions. And I really want to talk about trading stories and kind of break down people's trades. So, what I would like from all of you is I would love trading stories. And I really want to just focus on times you either made a lot of money on something that you didn't expect to, or times you took a big L on something you were extremely sure of. If you have a story about one of those two things, I'd love it if you kind of like DM'd me. And I don't know, and we can get a chance to actually talk about it. We'll go over charts and I'll kind of like work with some other analysts and we'll really do a deep dive. So yeah, that's it. I guess I do actually also have a quote. Um, my quote goes like this. The curious mind embraces science, the gifted and sensitive, the arts, the practical, business, and the leftover becomes an economist. Now, I actually love economics, and I think that's me being a little bit facetious, but the idea that, you know what, if this is what you love, you're going to continue to do it. However, I hope that we're all kind of incorporating different parts into this and keeping it interesting and making it your own, and just taking information from all these different places. I love the arts. I love business. I love economics. I love fiscal policy. I love monetary policy, right? I don't really limit it, and I'm definitely not a one-trick person. I know none of you are either in your trading styles or in the way that you apply them. And I think that's going to be my take from this, to be multifaceted and remember that, you know, it's more than just one type of analysis that we're going to continue to be doing to be profitable. With that said, there's a number of other people on stage. I don't want to hold you guys to having a quote, but if you do have one, I'd love to hear it. And if you just want to say good morning, what's up, and let's get into it, we can do that as well. Good morning, Elle.
Morning, everyone. How's everyone doing? Hope everyone's doing well. My quote is a goal without a plan is just a wish. So just make sure you have a plan, particularly with trading.
Absolutely. People are getting their clocks cleaned right now for not having a plan, and that's not okay. Shivam, good morning.
Good morning, Elaine, and happy to hear the Benzinga news. My quote is: the real glory is being knocked to your knees and then coming back. That's real glory. That's the essence of it. It's by Vince Lombardi. And since I've got a new quarterback in Carolinas, I'm just in a bit of a football mood right now.
Oh, yeah? Sorry to hear that, man. Daniel, good morning.
Good morning, everyone. Nice to see everyone back. Elaine, congrats on the Benzinga show and passing that test you took. Heard a little bit about that, so that's what's up, fam.
Hey, thank you. Yeah. Hey, I hope that we all just keep on continuing to go learn, and continuing education is a part of it. So I was kind of happy to just broaden my knowledge base and make sure the things that I know I knew. Alec, good morning. Nice to see you, man. How you feeling?
Good morning, Elaine. Yeah, good morning. Congrats on the test and the show. That's awesome. I can't believe I'm saying this, but I don't have a quote, but it's very good to be back.
All good, man. You're one of my favorite motivational tweeters,
Love to
tweet
hear that.
stars. Are you a
Love
tweet
to hear
star?
that. One
uh,
day.
um, Fahim, good morning, man. How you feeling?
All good, all good. No quote, but congrats. I think Benzinga is from my alma mater. I think Jason went to U of M. So go blue.
Go blue. You know, Fahim, I'll know that we've won the day that you changed that Cybertruck to an F-150, the electric version. Though it's coming. That's all I want to see.
Yeah, it's the app I'm making. I have to make all. I actually have F-150. I could do it right now. Give me a few minutes. I gotta move it to a phone.
Thanks, Fahim. Yeah, no problem. We're gonna go ahead and line that up. You guys, the SK Innovations and LG Chem lawsuit didn't. I don't know. Right now, I believe that there's a hold on it. So Ford's gonna be getting those electric batteries. Still have the ability to import those electric batteries. So it might be Ford time after all. I was really excited to hear about that. Hey, Patrick. Good morning.
Hey, good morning. No quote, but again, like everyone else, congratulations. I saw the news on Twitter and really happy for you and excited for the Benzinga show.
I am too. Thank you so much. Hey, Anne. Good morning.
Good morning. Congratulations on your show. I've got a quote from Franklin D. Roosevelt: "A smooth sea never made a skilled sailor." And I like that because we have been trading in choppy waters recently, and I think I'm grateful for the learning curve.
Love it. Yeah, absolutely. And this has been just a great learning experience, I think, for everybody. In the long term, we're all going to be quite happy we made it through this. Sev, good morning. Oh, it's nice to see you here, man. Do you want to talk about CPI numbers immediately?
Hey, what's up? I'm actually still going through 'em.
Okay, all right. I'll give you I'll give you a chance to
Yeah,
digest.
sorry.
You know
I mean, it
what? I
looks
mean,
good.
who
It
cares?
doesn't look too hot. What's
It's
up?
not it's not hot at all. And the year-over-year seasonally adjusted rate was going to be piping hot because, of course, last March we had one of the biggest dips of all time. So it, yeah, I'm with this. I'm not really. I don't know. I don't know what to read into this other than I'm looking at it and this is exactly what we expected. Uh, for
Yeah,
those.
it'll be interesting. I'm trying to go through the different line items and stuff. Also, year
Okay.
over year, it is going to be harder. But the other big question is going to be and this is kind of what I guess I'll be asking myself as I'm going through it is can can companies and are companies willing to pass costs through? Like, so on the one hand, we know we're kind of seeing inflation up the supply stream on things like commodities and stuff like that, and certain companies can pass through, but in terms of consumer facing companies, there is some argument to be made that in terms of brand loyalty and stuff, you don't like, do you want to be raising prices on people right now? Like, you still have 9 or 10 million people out of work. um, if you do think it's just a temporary increase, for some companies, maybe it makes more sense to eat the cost for 1 or 2 quarters. Now, Wall Street won't like that, but in terms of brand loyalty, you know, companies do have to be asking themselves, like, do I want to push through costs on people that are out of work right
I
now,
think it
or should I
depends on
keep
the
it
margin
going?
of the company, right? So it's like if Apple makes their phones $1 more expensive, another penny more of expense on these goddamn iPhones, that's it for me. I don't
Yeah, I
care.
mean, but you
There
say
will be
that,
no
but in
stickiness.
reality,
No,
they
no,
can
no,
throw a
Zev.
hundred
No,
dollars on
I
price
paid
tag
like
people.
$1,600 for my last phone, and I'm just not okay with it. They've got the margin. They have to have the margin. Meanwhile, is McDonald's have margin? Like, no. I think that people should be paying more for food across the board, right? Like, there's some companies that it's very obvious that they're going to be able to eat some of this cost, or they should be able to 1.6% on, sorry, 0.6% inflation, even as we continue to move through the year, because this number is going to keep going, right? Like, that's the thing. We don't expect inflation to stop here. If it was going to stop here, nobody would even blink at this. But this is a rising number. And so we can all be on the same page. Sorry, I don't know if you want to do it, Zeb. But what are we talking about? Right now, we're talking about the CPI report. And what does that mean? Like, CPI stands for Consumer Price Index, and it basically measures the price that everybody's paying for their goods in a number of industries. So it'll break it down by whatever the different industries. Um, but we use this sort of to gauge the inflation level. And what is inflation, right? Like, I know a lot of times inflation gets pegged as a bad thing, but it's literally just the rise of prices of things in different commodities. So I know, like, I was talking to somebody last night, and I was telling him, like, everybody was buying toilet paper last March for Lord knows why. I sat there and just didn't really get it, right? We didn't have a shortage. But now, where we do have this inflation that we know is going to come, I actually did load up on some basic supplies because I see the price of things kind of just continuing to steadily rise. And a lot of this is going to pass straight through to consumers at a
Yeah,
time when,
used car
yeah,
and truck inflation is wild. 5.3% month over month.
hey, maybe I can get a good price on some of these cars
That's
that I bought.
insane.
Because it was really down. The whole kind of used car market was down like a few months ago. So anybody, sorry, I know we kind of just jumped topics real quick, but anybody else looking at CPI? Do you guys have opinions on this? We definitely were looking to see what it would be, and the year over year adjusted rate was going to be wild looking. Like it had to happen that way.
The other thing is, Alfredo. I was in a room with, I don't know if you guys follow Alfredo. I don't think he's in here, but he made a great point. Like, when you see PPI has been coming in a lot harder than CPI numbers, a lot hotter than CPI numbers. So that would speak to companies not passing costs through all the way to consumers, maybe in more so it kind of being so PPI is producer price index, CPI is consumer price index. So PPI is what the producers are paying, CPI is what we're all paying, and that does kind of speak to the costs being eaten throughout the supply chain. I do think it's gonna be a question though of the magnitude that we see, and then how long people think it's going to last. Because if the price increases are permanent, it will get passed through eventually. You know, if it's temporary, just because of port congestion and a lack of container ships and everything, that will get worked out. They won't necessarily pass pricing through because it'll come back down. But if it is permanent, and that's the concern, which you could see a an increase and then it levels off, then we are going to start seeing increased prices on our end, I think.
Well, I mean, this is literally what the whole Keynesian economic thing is meant to stop, right? Like where we have a situation where the price is going to continue to rise while demand stays flat and goes down because the consumer, purchasing power hasn't caught up on the same level with the need of the suppliers. And sort of that's the potential of what exactly could be happening, right? We're seeing the inflation rate go up. We're seeing like these suppliers need to make more money. The purchasing power of the dollar is going down. We have a split economic recovery where some people are able to keep up, but the overall demand will not keep up. And there you go. Like there needs to be some sort of intervention. And meanwhile, on a federal regulatory level, Biden just keeps getting smacked down every time he kind of comes with some sort of comprehensive, whatever economic plan. And it's crazy because a lot of this stuff is like jobs, is the creation of jobs that don't pay minimum wage. Like that, lead to some sort of career outlook. Like that's what we want to see, and that seems like what would be a part of a green infrastructure plan, and it is. But it's crazy to see the guy have to fight both Democrats and Republicans just to get that idea across. Hey, May. Good morning.
Hey, Elaine. I was looking at the CPI number, and I'm not sure if I'm seeing the same thing you guys are. I'm seeing most of the increase come from energy, which kind of makes sense to me because of what's been happening in that sector. And then I'm seeing only a 50 basis point increase in used cars and trucks, which for me wasn't surprising given the inventory levels that GM Ford were just expressing was happening at dealerships, and also kind of the weird but still relevant kind of report from CarMax.
Are you talking annual numbers?
No, I'm just looking at the month. I'm seeing a 0.6 number, which is worse than expected. And
Oh,
then I'm
you
just
know
looking
what?
down the
Yeah, no,
line.
you're right. I'm looking at the wrong thing on here. You're right.
You probably looked
Yeah,
at
I'm seeing 50
September, which
basis
I did at first, and I was
50
like,
basis
"What?"
point increase.
Yeah, yeah. No worries,
Thanks
no
for
worries, no
catching me on
worries.
that one.
No worries. I at first I did that too, and I was like, "Wait, that doesn't make any sense." On particularly a couple of the items, and I was like, "Oh, you silly! You're totally looking at the wrong column." But
Yeah, 100. I did the
yeah,
same exact thing.
yeah. We're still at that 2.6, which means the Fed will do nothing, I think, but it will start to probably jog these markets around. So I think everything else you guys said was, I don't think it changes the things that you guys are saying. Let me say it that way. That's all.
No, man, I definitely, I definitely appreciate you calling out the error. If only because I'm currently writing it up, and I really am glad I didn't send that to my editor.
Oh, okay, good. Well, I'm glad I helped you with the bigger and more important thing, because once you put it in writing, I know it's like the worst.
Oh,
As
yeah,
a good
100%.
Now you gotta die on those numbers.
Did you guys? Yeah, exactly. Did you guys talk about? I mean, if we're talking CPI, obviously, to May's point, I think. Like, did you talk about the 60 Minutes interview with Jerome Powell? That's probably key to viewing these numbers as well.
I mean, no, but did he say anything? Okay, I know Chris is unmuting because he wants to rush us because it's time to talk about futures. Seth, this is our futures
No,
talk time.
that wasn't it. I was actually agreeing with him, but I was also PTRing and looking at Fahim's logo, and he just left.
Oh, okay. Second, May, thank you. I love you, and I always appreciate your input. Like, this is good stuff.
No worries. Congratulations. I'm so excited for you. Very well deserved. I know you've worked very hard. So very cool.
Thank you. No, it's all of us together. I'm like gonna drag the entire Clubhouse community onto Benzinga with me, in some way. I love these interactions, so it was brought on by everybody. Zev, what are your highlights, big takes from the 60 Minutes interview? I feel like he's been so consistent. I honestly, the only thing like my only take really is that like it's starting to affect me. I'm starting to hear it differently. He has been really, really clear that there is I keep saying K-shaped recovery, but I feel like that doesn't make sense to people. But there are a group of people in this country for whom economic assistance has not helped, for whom the pandemic has been tumultuous to say the least, and it will continue to have effects on them until we create a situation where the jobs that were affected and have been hit the hardest and the people that have been hit the hardest are actually addressed. It's something that this nation has like really avoided doing for quite some time. If you grew up black, like, or any minority, I feel like everybody kind of understands the feeling of it, where it's like, hey, a lot of things just don't apply to people that look like me. I see like recovery, I see people doing great, but a lot of times they don't look like me. And I think that's like what he and Janet Yellen and even Biden, like I feel like that's what they're trying to address without directly saying, look, like some people are fucked. But
No, he did kind of say that. He said they're not gonna pump the brakes kind of until, he's saying depending on how you want to measure it, you still have 9-10 million people out of work, and he's like, and that's who he's focused on.
Mhm.
The issue, there is a question of how much he can actually do, and how much, because again, he's on the monetary side. At the end of the day, I would argue those issues have to come from government. Like it's going to be on government, which in my opinion has completely failed to like target resources appropriately, and they get a pass for the first few months because it was kind of like just get as much money out as you can, but going forward, I think it's going to be on the government, and it's a question of can they target it to where it really needs to go. He's saying he's not upping interest rates until those 10 million that in the service industry specifically are kind of starting to get back on their feet, starting to find jobs again. And he's saying, and remember, they changed their definition of inflation to 2% over time versus 2% pump the brakes. They used to say they used to they would pump the brakes when they were forecasting 2%. Now they actually want to hit 2%, go over 2%, then they'll start talking about pumping the brakes. So I think we have a lot of time in that regard. So for example, core CPI was up. What was it? So CPI was up 2%. Core CPI looks like it was up maybe, or 2.6. Core CPI maybe 1.6 or 1.7, something like
Oh,
that.
sorry. Core CPI. Hold on, let me pull it up. Core one is
1.6%.
1.6. Yeah.
So that's one proxy. The Fed prefers core PCE. Core, we can use core CPI for right now. Wow, Bitcoin just broke 63,000. We can use core
Yes.
we can use
Oh
core
fuck yeah.
CPI for now. So he's saying until that is above 2% for a sustained period of time, he's not talking about interest rate hikes. Now the market might be saying we don't believe you, which is
But Zev, anybody who has eyes has looked at the effing 10-year chart and seen that we were sitting at 3.2 at December of 2018. Like that is where we're going. There's no question of
well,
it.
yeah, but keep in mind 3.2 is a lot more difficult once you've ramped up the debt.
No, I agree. I'm just saying it's like I don't know why people are
And
looking at 2 and saying like this is the highest I ever,
well, I
like
don't
that
I
this
don't
is
know
a
that
shocking
3.2
number.
is accurate. I mean,
I think
remember,
3.5 would be accurate, Zev.
I don't know if that's true. Remember, a lot of debt was refinanced throughout this pandemic, and the insurance companies and stuff, they're not looking at at the bond market for returns as much as they are looking for it to hedge liabilities. So if they have liabilities out for the next 20, 30 years on, say, insurance, and that liability, is at something like 2%, then a 2% bond is very attractive because they can cover their assets. They're not waiting
I
for it
mean,
to necessarily go to 3.5% so they can make some money.
I
They
want to
an
go the
insurance
other
company.
direction and also talk about the repo side of this, though. Like, from what I'm hearing in the whole situation of the repo market, is that people are paying for like people to take these repos so that they can short the bond market. Right, like that's the whole fucking discrepancy in this whole thing. Like, yeah, absolutely. Obviously, banks, people are holding bonds are also looking at this and saying, "Wow, I'm enjoying this percentage. I'm enjoying the money. I'm making an opportunity." But truthfully, like the repo side of it, like people, that is the safe play right now. People are shorting the hell out of these bonds, knowing that we're going to continue to see this rise in yield. It's a guarantee that it's going to happen
But you're talking rising yield. I mean, in the short end or the long end?
on the short end and the long end.
I mean, again, the Fed has said that they're going to keep the short end. I mean, they don't. Yeah, I mean, it's not on them to control 2 year or 1 year or 5 year bonds. They're just the overnight rate, but they're keeping it clamped down. Again, for the 10 year, there's natural buyers that come in at certain levels. You start to break 1.7%, it's more attractive than the dividend yield on the S&P 500. So the wealthy who want income, it becomes more attractive. You start to get above 2%, the insurance companies that want to cover liabilities becomes more attractive. The other thing, keep in mind, I mean, what are German boons at? They're like you have negative rates all around the world. So a 2% positive rate is very attractive from that standpoint. So there are levels where you get natural buyers in, and I don't know where treasury yields go. It's gonna, again, I mean, here, so the J&J vaccine, they're pumping the brakes. They'll probably start it up soon, but even Jerome Powell is saying like the number one risk to everything is, he's like, we are seeing an absolute boom in the economy, blah blah blah. The number one risk is still the virus. So that's going to determine a lot of things. And
I mean, yeah,
like,
but the number one risk is the virus, but it's the virus for who? And like that's the thing that I think nobody wants to say out loud, that it's just like, look, the discrepancy between black rates of like and Hispanic rates of vaccination and non is astounding. It's not good. In most of our major cities, there's a huge problem, and this also affects like it's on the income side of it. Like there is a group of people for whom this pandemic is still as dangerous as it was day one because of a lack of information, because of a lack of access, and that like until that is directly addressed, we will continue to be at risk. Because so far,
right, but
there's
so what you're
plenty of rooms
saying
you
is,
can go into and say, "Hey, I just got vaccinated," and people are going to be like, "Oh, I don't know about all that," even though a quarter of the country is vaccinated at this point.
but that's also why he's saying he's going to keep rates low.
Oh yeah, for sure. I mean, I'm not necessarily against it. I mean, however, I don't know. The number for rates being low, I guess I feel like is the one that I think that's what's up for debate in some way. Like 2%, yeah, but I don't know that they're actually going to be able to keep a hold of it at 2%. And you're right, there are natural buyers. So I think that's the interaction that we're
But
waiting to
again,
see.
he doesn't control the 10 year side of the curve. Like when you say 2%, he can only increase the federal funds, the overnight rate.
Right.
So that's all I'm saying with core CPI at 1.6%. According what Powell is saying is we're nowhere near a rate hike. That is what the market is debating. Whether he's going to be forced to change, which I think he'd lose a lot of credibility if he did, and he kind of learned his lesson in 2018. And that's what the market cares about. I mean, yeah, like the 10 year is an issue, but for right now, the market just wants to see that Powell doesn't plan on moving at all. And this CPI report gives nobody any reason, to think that he would.
Yeah, I'm sorry. We got to reset. Go ahead, Elaine.
Go for it. It's 9 o'clock. I actually got to run anyway. Sorry.
Yeah, peace, Ev. I'm sorry, you guys. CPI is super important though, and I'm happy we kind of took a second to try to talk about it a little bit more. We'd have to do an entire room. We probably have to do a series of room on bonds, um, and the interaction of that, and the discount rate, and sort of what that means. And there's something Zev started talking about, German Bund. What are they called? Whatever. That's something
The
I'm not.
boons are the same thing as regular. They're just the German version of the bonds. It's
No.
the jargon. It's the jargon.
It's the good stuff. Yeah, this is something I didn't know. So thanks, May and Zeb, for adding some just some insight on that. And we're going to continue to learn with you guys because bonds are important. Anyways, let's do a refresh and we'll talk about the futures. No, go ahead, May. Get it off. What were you going to say?
No, I was just going to add, I think the steepness of the yield curve is going to be more important than the absolute rate, which is another piece of, I think, what Zev is saying, because especially when it's on the long end, and the buyers thing is a real thing because they can lever that and get the rate of return, get much closer to the rate of return that they need to achieve from a, um, from a, um, money's owed perspective. Like if you think of the big guys as like a company, they need to produce approximately 6% in earnings via investments. So if you lever the 2 and change percent, you're actually much closer. So you don't have to take as much risk on your asset allocation. I think that kind of fills in some one particular set of fairly large players that Zev is speaking to. So I'm more how steep is the curve than I am the absolute rate. And if that thing starts to flatten, then I get very nervous. That's one thing that might just be helpful in understanding maybe Zev's alternative perspective to maybe some that are out there, because I know both are very loud. The second thing, though, that I wanted to just point out, and this actually goes back to something, Lane, you and I talked about before, is the energy component. And I know that impacts Anne as well on the future side, because that energy component has been such a conundrum. It is the major thing. The reason core CPI is so much lower is because the energy component has been, like, for whatever reason, despite everything that everyone is saying about what's going on with the dynamics of energy, it continues to rise in our CPI. And it both does and does not make sense. I'm going to say it that way. But it's a portion of conversation that I think is often left out that is quite relevant. I won't try to make calls on it either way because I actually don't know, but it has been a frustration point as I've looked at different plays that I've attempted to make in the market on the equity side. I'll pause. Thank you, guys.
Thank you so much. And yeah, there's a lot we could get into. I just looked at the China balance of trade numbers. Oh, you guys, all of these economic indicator and reports are so good. All right, let's do a refresh and talk about the futures.
Good morning, everyone, and welcome to the first place every morning you should stop to get your stock market news. That's right, I'm talking about the morning show presented by Stockhouse University. We are not financial advisors, and this is not financial advice. This is a conversation amongst friends that love talking about stocks and want to improve our profitability by coming here every day, talking about the market, relevant news, and how we're going to use that information to be profitable. We think education should be accessible and affordable to everyone, so we have a free Discord that has tons of resources and over 1,800 amazing members at all different skill levels that are also talking about the market, and they're trying to grow as well. We also do free classes on Sundays, and we would love it if you would join that community and contribute, because together we are so much more powerful than we are individually. Invite your friends, invite your family. Let's all create opportunities for generational wealth. Also, if you like the conversations that we have here, make sure to click the greenhouse on the top and join the community. We'd love to continue the conversations, and we would love it if you guys would contribute every time we're on stage, not just in the Stockhouse U family. Thank you.
Oh, I guess I want to say this one last piece of like the reason why we talk about these economic reports and stuff like that is because there is a trade in there. There is a way to take this information, talk about the price of goods rising, and say, hey, I think I could make some money on a company, or I think a company is going to have problems. I think that's what Zev sort of was starting to talk about. Who's going to eat the cost of these inflation, of some of this inflation on some of these products that we're going to do? And then me talking about the yield of different businesses. Certain businesses have a much higher margin, and that they can definitely eat some of these inflationary costs and some can't, right? Like, so kind of going from these large scale numbers and large scale the macro side of how countries are going to be trading with each other, and then kind of coming back in and looking at a specific company. We could talk about EV and batteries and talk specifically about the price of mining and carrying and refining materials from different countries to America. Now we can actually get into a place to use that information. And I know we didn't really make that land necessarily, and that is a much longer conversation to get to where the trade is at the end of that. But that is, at least for me, why these numbers are so important, and why it's important to understand them better. And so once again, I appreciate the insight for everybody, and I hope that as a community we can kind of continue to grow and have really good discussions about this, because I'm going to do so much more research on the energy side. I think that you're kind of onto something there. With that said,
It's been driving me nuts, Elaine. I hope you do, because I want to hear your thoughts. It's been making me insane.
absolutely. With that said, who's going to talk futures? Shivam, were you going to be the futures person for today? Do you want to get into /NQ for us?
Absolutely, Elaine. Just give me 1 second.
You guys,
I
I'm
wasn't sure
so
we would have time left.
I know, and we haven't even talked about news, but it's okay. It's
Right. So S&P 500 and Nasdaq have been a completely different story from what we see on Russell, because especially the sector rotation, which we were talking about, has moved back to technology, but mostly going towards the larger numbers. Now, after the CPI report came out, and I was pretty sure after seeing it, and May said it, Zev said it, you said it, it kind of provides a stability to the yield rate, at least for the next 4 or 5 weeks, hopefully, if nothing big occurs again. Um, that also means, and also Johnson and Johnson talking about that, hey, there's an issue with their vaccination. That means maybe that point where everything opens up doesn't come at the same time, so the inflation rate should not go up. So having said all that, uh, the market started to behave much better, a bit better, not much better, than where it was before 8:30 a.m. Eastern. So
Mm-hmm.
Nasdaq, as we say, is sitting at 13,882, which is just a 0.5% increase from where it closed yesterday, which is still optimistic. At least S&P 500 is coming back to where it ended, and
Mm-hmm.
and Dow Jones is struggling a bit, but I'm expecting a good run into the day, coming out of these three things. Now the biggest part is what is making S&P 500 move are mostly the FANG part of things also, right? We have seen Facebook move, we have seen Amazon move, we have seen some of the chip parts move, and also we have seen something like Nvidia just having a monstrous day yesterday, after the news breakout. Now, all these, especially Amazon, you look at Apple, you look at Facebook, they contribute 20% weighted average across the Nasdaq 100. So whenever they move on the overall side of their stocks, it has a rippling effect on Nasdaq 100, as well as on S&P 500. So having said that, I think we are staying on course, even though it's a stretch run. It's something which makes me uncomfortable given the run on Nasdaq till now. But at least we are looking at a 13,890, 13,895, 14,000, and 14,050 is what I'm looking at. On the S&P side, S&P 500 side of things, we are at 4120, which is not bad, honestly. The where we were a month back to what we have achieved, it's a pretty good run for S&P 500. Does it need some time, some kind of phase where it goes through consolidation? Don't forget, it is the opaque week. We have 30-year bonds, 30-year Treasury bond sale today. I guess it's today. We have some of the stuff which can have indirect correlations towards the S&P 500, but if the market continues to behave and act, and we are still getting into the earnings season, we are not into it, we are still getting into the earnings season. So if S&P 500 decides to create the base near this mark, which could be 4080, 4075, or even close to where it is right now, that is 4120, I would be happy. We have created a new base after the 380, 381 mark, or 3810 mark. That is something which I am looking forward to, because in my opinion, in my firm opinion, I don't think we have found that base since that awesome number of 3810. And that's where our bullish case, if you remember, Elaine, came up, that now it can start to move up once it kept on bouncing up after the 3810 number back in March. So I'm happy with that. Let's see where it goes after that.
I love that. If there was anything I was going to add, because I think you're doing a great job.
Oh
So
no, nothing like you. You do it.
if there's anything I want to add, like I guess talking about price action is one way to technically to do some analysis on something. I also just want to look at like volume, right? Like there are two really simple indicators that I think like go under watch sort of, and volume is just another main one. And so, especially if you have the opportunity to, if you have that on your chart, like splitting your volume and looking at it between buyers and sellers is also something I find to be really important. But we can even just look at average volume and say like, hey, I'm looking at the S&P 500 futures, and as we continue to pull up, I'm noticing a diminishing volume, and that's concerning for me. On the RSI side, and just that, you know what, this trade is piping hot right now. The market is sitting at all-time highs, and I love it at all-time highs. If we're going to continue to push and have this market exuberance, I'm very happy for it. But personally, if we sit at 410 for the next week, would that change my bullishness of the overall S&P? No, it would not. It actually would make me feel a little bit more confident that we're going to continue to hold this level and push, as opposed to take this 393 pullback that I could still see us absolutely doing in the next, whatever, 4 months, right? Like I can see that happening. And the difference between those two really has to do with constructive growth. And constructive growth relies on the companies. I mean, we've talked about it for so many different reasons. Hey, a lot of these companies that are sitting back where they were pre-pandemic have more debt. A lot of these companies that are going to be experiencing inflation price on the price of their raw materials are still in more debt yet and do not have the return demand that they did pre 2019. Yet we're still pricing them as though they are better than they were. And that's the concern, right? That is the S&P, that is the Nasdaq in some ways, and for me at least, that's the only thing I'm really looking at because otherwise I think it's hard to not to look at these charts and not be bullish. So for me personally, like, and if I just had like numbers I'm looking to hit, like if we're going to continue on this amazing uptrend, I mean, my next number is not 415, it's 416. It's kind of what I'm looking at for the next leg up. But also seriously, I'd love for us to sit at 410. If we don't hold here, I'm looking down to the 4006 region, or 400 on SPY. Doesn't really matter to me which one you're looking at. But I am just curious. Also, I think things that we don't talk about often, because you did a great job, Shivam, is VIX and volatility in general. And I mean, we're seeing like kind of newer lows, at least for our current time period. Seeing VIX, that's the one that I like, breaking below 19 and kind of holding down here in the 17 region, is great and kind of just is it gives me hope maybe that we'll see a little bit less volatility. I'm a day trader. I kind of don't mind the short term swing and sort of the lack of direction and being able to sort of have a stock pickers market where we're choosing. But with that said, I also, when volatility is through the roof, it does create an atmosphere inside of the market where people are scared and people are scared to take larger positions over longer periods of time. And we know that there are huge reserves of cash on the side, and I want people to kind of hop in. I like Apple where it's at. I like AMD where it's at. Ah, Zev, I saw that. After the Xilinx acquisition, are you serious? I mean, I expect dilution, but still, this thing is a monster. And with that said,
But I think it's supposed to be accretive in the first year.
yeah, yeah.
Plus you might get some merger arbitrage unwind.
Well, I mean, we're gonna get it. Sorry, go ahead.
No, that's it. I was just saying I think Xilinx is accretive, and then remember merger arbitrage has people buying Xilinx and shorting AMD, and you could see some of that unwind once that completes.
Yeah, absolutely. I mean, just from a fundamental level in terms of manufacturing capacity, and the spread that they're going to be able to achieve across all of the different GPU levels and the rise in numbers. I mean, I'm looking at this long term, right? Like you said, short term price action is still going to continue to have volatility, and people are buying Xilinx and shorting AMD. But I think that's going to get resolved, and we're definitely at a point where we'd expect that to start happening, and kind of look over for the next few quarters and say like this thing is prime.
Did you catch the NVIDIA event yesterday? I mean, that's kind of what sparked this most recent leg. That NVIDIA is bringing us a NVIDIA introduced the data center CPU.
No, I saw that, and then
RIP
Intel
Intel.
completely tanked. We don't have time. We don't have time for this. I have lots of thoughts about Intel. To be honest, I'm not as bearish as everybody else.
Intel doesn't stick to deadlines. They have all the time in the world.
Intel doesn't stick to deadlines. They have all the time in the world. Intel does. Okay, no, we're not going to get into this. So, I do want to talk about news though. If we're not going to go over all of our sector ETFs and all of that, I'd love to know what kind of news you guys are looking at, and I still would definitely like to kind of stick to a watch list. So, what's on everybody's news radar? Christopher, what do you got for us?
Give me just a second to be perfectly honest. I had everything loaded up for oil.
Oh, no, pause. Let's talk about oil. Chris, my bad. Thank you.
And
Like
then
we're
when I
just
just
off.
fucked it
It's
all
been
up.
so long, so I haven't we haven't had a chance to do all the things that we do. Everybody's exuberant. Talk about oil, Chris. Let's hear
Okay.
about it.
All right. So, well, first thing, we got to talk a little bit about the news, which we already have as far as the J&J vaccine and everything, which is just going to increase some speculation as far as lockdowns. And of course, I have some bearish sentiment, and we can kind of see that translating into the market a little bit of bearish sentiment, but really it's not enough to hold. We still got a lot of positive catalysts that are sending this thing forward. In addition, we were kind of consolidating, and this is exactly what we mean when we say trading in a range, right? Technically, you went through a consolidation period where we ticked down from closer to 64, 65 down to like the 59, 60 range and kind of held for a little while, right? And now, as we can see, that was the consolidation period. We also had these good China numbers, right? So let's talk about that real quick. Chinese import data really helped the oil numbers here. It's boosting everything up. So actually, we jumped up 61 cents on Brent, and then 53 cents we jumped up on
WTI. So that's looking really good. I'm expecting us to actually hold here over this 60 range to the 60-50 range, especially after OPEC news just came out as well. And they just said, they upped the 2021 world oil demand forecast by 100,000 barrels per day to increase of 6 million barrels per day, average of 69 million barrels per day. So with that coming out, I am now turning to my bullish sentiment on oil. I'd like to see us hold over 60-50 to kind of stay here, and then I'd be looking for that next leg up to 61, 62. Like I said, ultimately at the end of summer, I'm looking for that 75 plus, looking towards 80 range. Which is of course the price target that we've been trading in between 40 and 80. So I'm looking for that $80 range, but we're a while off. Anyway, that's it. I know we don't have a lot of time.
No, that's good. I love that. I love your oil takes, and I think you're spot on with this one. Anybody else looking at crude oil or any of that, or you guys want to move on to some quick news topics? Alrighty. What do you do with 500 Olympic-sized swimming pools filled with Fukushima water? Because that's what some U.S. and Chinese people are talking about specifically with Japan, right? So I don't know. This is just an article that I'm looking at, and there is something to say. I know everybody's kind of been bullish on iridium, and we're definitely looking forward to expanding our alternative energy. Where is that going to come from, right? Solar has a cap, wind has a cap. A lot of people are moving into the nuclear space and saying, hey, if we're going to continue to build an infrastructure that can support all of these EV vehicles and kind of all of this thing, that nuclear is going to be a part of it. And yet and still, like, these nuclear accidents, whenever they do happen, we continue to deal with the effects of them for long after they're done. And this is just something that we're once again seeing. So I'm very curious as to how this is going to play out. And in general, I mean, public sentiment about nuclear energy has not been positive. I think it's kind of the same way how people feel about oil in a lot of ways, where it's like and there are parts of it that are not positive, right? There are parts of it that are completely detrimental to the environment, to the people that are working. There's safety concerns. However, with every type of energy, there's always going to be a cost, right? We're ripping stuff out of the earth. And so with that said, looking at the long-term effects of this and how we're going to deal with it on a sustainable level is something I like to see. Another thing I want to talk about briefly is the AstraZeneca vaccine, which has been seeing problems all over the world in terms of blood clots. I know I heard some people talk about J&J having a similar issue. I don't know if that's true or not. But AstraZeneca, so they talked to the CEOs and said, hey, like, are you guys going to continue to work on this vaccine? And would you make another one if there was another pandemic? And they were like, absolutely not. This has been terrible. It's been nothing but problems, and it's always something. And I think that's something we also should think about, right? Like, yes, a lot of these companies got a lot of money to push this vaccine, and there has been a push, but they have exposed themselves in a way that most of these pharmaceutical companies do not normally. There is a reason why that regulatory process takes so long, and it's so that stuff like this doesn't happen, where they roll out millions of doses of a vaccine and then find out people are having heart problems, blood clot problems, sorry, associated with it. This is an expensive fuck up. And I this is what I was telling people like months ago, and they're like, "Oh my God, I can't take this vaccine. Like, what's going to happen? How do we know about it?" And it's like, look, if they roll out a vaccine on this scale without having all of these testings done that they normally do, they'll be exposed to such a large base that we will very quickly see if there are going to be problems with it. There's no way you get to give out hundreds of millions of doses of something, and that's not going to give you a really good understanding of how it affects most people in different types of health, different levels of health in different situations. And so we're seeing that, and yeah, I would be concerned on the other side that why would anybody do this again? This is a rough road, and it's a rough road that is tied into government money, which pays out differently than when you're going direct to consumer. So other things I'm thinking about in terms of economic recovery and growth.
So I got a couple other things I wanted to cover as well, and I'll kind of translate it directly into a watch list. Some things that you guys can kind of pay attention to, just because they're current and right now. Um, Riot plays. We talk about this all the time when civil unrest happens, right? And so we look at Minneapolis, and so I'm watching Digital Ally I'm watching U1 and U1K as well, just because of the civil unrest. Um, Also, I want to talk about Ford. We've been talking about China all day, right? Ford and Neo. Yeah, so
Talk about Ford. Bring
yeah,
it in.
yeah. Ford is, and thank you Fahim for the PTR change. So
Yeah.
Ford is opening showrooms for electrical vehicles in 20 Chinese cities, and also allow its EV customers to use Neo's charging network in China. So Ford and Neo news that's popping right now. Also, we kind of been talking about this for the longest time, Elaine, and I tagged you in it this morning.
Christopher.
Every single airline got price targets this morning, upgrades, and I'm just super excited to see it. And like I said, it's the buy time for cruise lines because they're next, but I'm super bullish on airlines right now.
Interesting.
Go ahead, Jeff.
I heard you were talking about automobiles. Do any of you see MGA Magna moving up like 5% pre-market? There's a Seeking Alpha article.
Joint venture with LG.
Yeah, said 10-year contract
Yep.
to build Apple EVs. I mean, they also just provided new financial updates and stuff, but we've spoken about that a few times, I think, in these rooms. So nice to see the move there. If they do get tapped for the Apple EV, though, that'd be pretty sick. I mean,
Honestly, this Apple
they're
EV is the gift that keeps on giving, Zev. Like, honestly, I think that we're going to continue to get this. I mean, it doesn't seem like they want to confirm any of the news, and I'm okay with
what
that.
Right.
Don't
I just
confirm it.
followed the rumor and I'm buying the rumors
Yeah,
and selling.
I'll stick with the rumor. I'm good with this too.
I mean, but regardless, the thing is, regardless of who builds it, Magna's going to get something. Like, Magna is in every
All right,
major
hold on,
OEM.
Zev. You're correct, but before we run out of time, do you guys want to talk about the idea of this Coinbase IPO? It keeps getting upgraded pretty much immediately, and here's what I want to say.
Bitcoin 62K,
Oh,
like to
Bitcoin's
the moon.
Bitcoin's running next to this. Okay,
To the
right.
moon.
But seriously, you guys, IPOs tend to be unnecessarily risky in terms of the profit potential. Everybody did this with the Roblox IPO. We all, I mean, and it was like, look, I'm interested in the company. I'm interested in the storyline. Shit, I'm probably going to be an owner at some point. I will invest, but I'm going to wait for the lockup period. That's it. I don't know. I would love to hear what somebody who's more bullish or something has to say about it, but it's like, let's just pay
I don't
attention to this.
know.
Let's follow the price of Bitcoin, but like, there is no need to dump on this thing. It just got upgraded from 440 to 600.
Moffat
I'm with it.
Nathanson. Yeah. She's
I
good,
don't
though.
think it's going to go that high immediately, but to your point, like I got in the Roblox IPO
I
at
know,
60
and look
bucks, at
and look
62
at you.
bucks, and look at it.
Look at it.
Wait, you got in
Look
on the
at it.
IPO?
Yeah, I got in IPO day, 62 bucks.
How'd you get in on the IPO?
I
No.
didn't know.
He
I
got
didn't
in
get
on the
in on the
day, not
IPO
on the
on the
IPO.
day
Oh,
of. Like I grabbed
come
it at
on, guys.
62.
That's a very big difference.
No, I didn't get in on the IPO.
Zev,
I
none of
got in
us are
on
accredited.
IPO
It's
day.
not a big difference. when a retail investor says I bought the IPO, they mean like I bought it when it opened, man. Like they
Yeah,
don't mean
that's
they
what I
got
meant. Yeah,
pre-IPO
That's
price.
not the IPO. That's
All
the
right, fair
secondary.
enough. It's the secondary. You're
Hey,
correct.
some people on this platform keep claiming to get in on IPOs.
They can
I
get in
mean,
on Weeble with some of them. They'll allow you to.
Either way, I don't know. I don't think that the trading the IPO was worth it for the what is this what so 15% increase?
I mean, I don't think
It's
Roblox is
sitting
worth
at
it,
it's sitting at
regardless.
75. Yeah, no, I agree with you, Zev. I think that the IPO thing is unnecessarily risky, and that I'll see you in 6 months when it's right back where it started. Now, Coinbase might not be the same thing, and sometimes we do get these ones that just kind of run and never touch back, but it's so unlikely.
Like Beyond Meat.
Like Beyond Meat.
That was a
Um,
monster.
that it
Right.
happens every once in a while, but I don't know. You know what? And the cool thing is because it's not people's kids who buy Bitcoin, I'm not hearing nearly the same amount of hype. But then again, I don't know. Maybe it's just because of the people that I'm around, and we're not like crypto. We're not crypto drunk on crypto power. That I'm not hearing people just go nuts over this. But the price upgrades, the Bitcoin response sentiment has been insane. So I just would advise everybody just use some risk management. That's all. There were plenty of places to find a 15% increase in price, without having to sit there at your computer praying to God that you get filled first thing in the whatever, not the morning, but whenever that price action opens.
Yeah. Also, one more thing I did want to mention that the Arc X contract came out yesterday, and that leaps are dropping today. So I'm just going to be watching those and see if I can get a good price on them.
Why would you want a price on it? Dude, the whole fund is garbage.
Now, sure, but I mean a $24 strike that's like under $150 right now, and it's almost guaranteed with her track history.
How is it
Come on now.
guaranteed? Past performance doesn't guarantee shit. What are
It
you talking
doesn't.
about?
It does not. But
Have you seen the
like
contents of this
it's my
piece of
thesis.
garbage ETF?
Yes,
On
exactly. But
what?
my thesis is that it's not complete and that she's going to trade in and out of it to boost it up. And right now, it's just
Her
like
trading's been kind of sporadic.
Her trading has been terrible.
I don't know if it's look. The issue is it's not what the market wants. The market wants reopening. The market wants something that's levered to the boom, and that's not this. That specific ETF. I also think there's a problem with the fact that like Trimble's the top name. The
Thank
second
you.
name is the
I don't
print
like it.
ETF. Trimble's 5% of the print ETF.
Thank you.
Like, are we getting double billed here for 75
Yes.
basis points to go into X, 75 basis points for her print one? Like, so on 7% of that, I'm paying 1.5%. Like,
It's not a good value. And honestly, and especially with the holdings, it's not even really. I wouldn't even call
just go
this a
buy Trimble.
serious. I wouldn't call this a serious space exploration ETF. Like if I was going to be honest, but this is a much longer conversation, you guys. Chris, I challenge you to do a point by point comparison between this one and ROKT or UFO, and tell me that they're not better in terms of exposure
Oh,
towards
I already
companies
agree with you there.
that.
I agree with you there. Like what she's holding is crap, but it's going to change.
All right, okay, you guys, we've already gone too far. So, in one word or less, what are you watching today? Mine is I'm going to be watching Apple price action. I said that last week. I'm kind of looking at it today. I looked at the hold under 131. I'm looking at the 10-year, and I'm saying, hey, we might continue to see a large cap growth move, and I'm into it. I'm definitely kind of looking to see if we're going to make a next leg up at 133 and then 135. Ness, anything you're looking at for today?
No, I'm not looking at anything. Carol just joined the stage and Cassie. I didn't know if they had
Jeffrey's
anything to
saying
say
Amazon could
before
be
we close
57.
out.
Yeah, let's go down to Carol and Cassie. Hey, Cassie, how are you doing?
Good morning. I'm doing great. I had come in on the IPO talk, so if we've kind of moved past that, I can wait until it comes up again in another discussion. So not a big deal.
No, 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 no. I always enjoy you coming into these conversations. And guess what? Maybe we're not going to end at 6:30 today. I'm going to be all right. So let's get into it for 2 seconds. What did you want to add, Cassie?
So I had just wondered kind of what people thought related to how IPOs, for a lot of people, retail investors who are, the ones who are buying on, that first day onto the market, um, is it kind of that they're starting to realize maybe that, those things spike up, and having not realized that those hold time periods, come back around, like you said, I looked at some at pre-IPO, and ones I had looked at, GoodRx, which I love the company, love what it does, use it all the time. I passed on it, and I was like, you know, I watched it spike up, and then it got hit by the Amazon deal, and now it's right about where it had started, actually probably a little bit lower, or Uplist, or Upstart, I think it was. Sorry, Upstart, and even Snow. All of those things were kind of a new phenomenon for retail investors, and maybe people are starting to learn their lesson. I'm not sure if you agree with that or not. And kind of that thought around the IPOs, and how retail investors might learn from what's happened this year with those large spikes at the beginning.
Yeah,
So
no,
that,
absolutely. I think that's a really great point. And and on top of that, like if you even look at IPOs in the same sector with similar companies, I don't know that Coinbase has a great comp, but it's like if you look in tech or you look in some of these overextended tech companies, and I think the Snowflake IPO was like one of the biggest ones that like I actually did participate in. and it's like the risk there. And then you look at that price action coming down to, so anytime we have these shares, like these IPO shares that are sold in the primary market, like there is this lockup period basically and a penalty. And so that they're given that they can't trade them for the first 6 months. And once that opportunity comes for them to sell, you usually see a pretty strong price reaction because I got these things already underneath the IPO price potentially, right? Or at the price that the IPO actually said it was going to be, not the price that it, whatever that it came into the secondary market from. So I'm with you, and like I think that it's so not whatever. Everybody should, if you don't already do this, like take a second and look back at some of the other IPOs that people have talked about. I mean, and of great companies at that. Like, I mean, Rocket Mortgage was one that it's just like, why? Why? They make money. They have a product. I'm so bullish on Rocket Mortgage. And look at where they're, still sitting at. And then they became a meme stock. So there really is no rhyme or reason in the short term to explain why certain companies do what they do other than, just random public sentiment. And the IPO is a great place to see that kind of just high volatility and energy. So I just really agree with you, Cassie. Hey,
Yeah, hi.
Carol.
Can I just chime in?
Yeah, go for it, Fahim.
Yeah, so I just checked. So I got in. I had the option to get into Oscar at 38. Now it's trading at 22. So it's 50% drop. And Digital Ocean, which I did not get any allocation, it's at 41, and my price would have been at 48. So yeah, it's totally true. Even if you get them at the offering price, they still do drop, primarily because of that 6 month lockup period you're talking about. And there's a new one coming tomorrow called App Lovin for $75 to $85. APPLOVIN.
Hmm.
But I don't know anything about it. But yeah, to your point, these things are going to drop. It's not necessarily going to drop, but it's volatile.
Yeah, it's just unnecessarily risky. Like it's not like you can't make money on these things. I've made money. Plenty of people will continue to make money. It's just, hey, that's all. The risk factor, And if you're going to be in this market for forever, it's at least for me, it's not about making money one time. Anybody can luck up and make some money one time, but can you do it every time or consistently enough that you don't have to ever go back to work again? That's my question. And so for me, IPOs are not something I can consistently be profitable on. Carol, did you have anything you wanted to add or say?
Hi, yes, I did. Good morning. Happy Tuesday. How are
Good
y'all?
morning.
I wanted to ask a question. I apologize. I'm one of those people kind of need. I'm not that quick, and I missed the. It was three. I missed the tickers that the guy said for the riots. The
Civil unrest. Yeah,
yeah.
it
What
was Digital Ally.
digital
And,
ally?
and
Do
actually,
do
they
you know
already
the
kind of
ticker?
ran if you're looking at it. DGLY.
DGLY.
Hmm.
David George Larry Y. Okay. Yellow.
Correct.
Right?
Another one is
Okay.
Vislink, and what they do is the cameras on police officers' gear. So
Ah.
Vislink, VISL.
Oh, I have VISL. Oh,
Yep.
I'm so
And
embarrassed. I didn't even know what they did.
if
Okay,
if
I
if you
have
look
that.
at it and it's up, that's why.
Okay.
And then the other one was U1, which is Urban One, and
You
U1K.
literally. Oh, you one. The number one K is is the ticker.
UONEK and UONE.
Wait a minute.
Also BYFC.
Okay. UONEK.
Mm-hmm. Mm-hmm.
Unicorn Oscar Nancy Edward King.
Correct.
Thank you. I apologize, y'all. I'm that remedial for
Not
that.
a problem. Just they run for different reasons. The BYFC
Okay.
and the U1 runs for anything like black related for civil unrest. Digital Ally and
BY.
Vislink
I
pretty
missed.
much run with anything where police are involved.
Oh, I
But
missed on
Carol,
B. Did you say BYFC?
Yeah, but for more reasons, I
I
don't play
missed that.
them.
Oh, okay.
I
I just
also
want to check
Carol,
them out. Um.
yeah,
Yes.
do
I'm
some
sorry.
good DD on some of these. Like there are reasons for why people do take places in them, and there's a number of us who probably don't, like for the
I
same
won't.
reasons as to why people do.
Okay.
It's It's an interesting. It's worth more talking about for sure. This conversation shouldn't end here, um,
Okay.
because
I
there
will
is
do
no.
research.
Yeah, please, and then come back tomorrow and let's talk about them. I want to know what you
Okay.
think about this.
And I
And
had one more question, if it's okay. I heard
go
you
for it.
all talking about um an IPO, and you all were saying the it wasn't the stocks that were in it weren't great, and but I missed what it was, and I'm y'all were just talking about that just before you were about to close.
I think we were
An
talking about
EFT.
ARC-X. I think we're talking about
ARC-X.
ARC-X,
See,
which
that's
is a
why I
fund.
wondered if that's what, right. I bought that, the Kathy one, and I couldn't, I never heard her name or the ticker name. So,
So
but I heard what
Carol,
y'all were saying.
and what I'm advising anybody who wants to hold this thing do is look at the expense ratio of this, and then look at the
Okay.
holdings. Right? So the expense
Okay.
ratio is how much they charge you on an annual basis just to manage and whatever else, right? These are all the back end fees on this fund.
Mhm.
And then look at the holdings because you could easily buy every single one of the stocks inside of this fund, and
Mhm.
there you go. You've all of a sudden saved yourself some percentage point year over year just by doing that on your own, right? There's nothing
Wow.
special about her owning stocks. Two, if
Okay.
you look at what she's holding, she is holding her own ETF inside of her ETF, so she's getting double charged to hold this stuff. Like we're paying her two times over. Not only
Wow.
that, if you look at the companies that are inside of this, my argument is that they're not. This is not a forward-thinking ETF at all. This isn't exposure to something that's too risky, and I'd like to have it through an ETF. It's not too expensive. None of the stocks she's holding to me are giving me the idea that I need this, that I'm getting some sort of advantage, either from a cost perspective or just from a diversification perspective in holding this thing. And I think that there are other comparable ETFs with much lower expense ratios that are poised in much better parts of the industries that she claims to want to be supporting. And there's so many times people just buy because it's Kathy Wood. We all love Kathy Wood. Talking about her is blasphemy, and I can respect that. But I'm not talking about her. I'm talking about her investment strategy.
Fine. Understood.
Like
I
as a person,
appreciate
she's
that because
cool.
it's the first. I was all happy that I bought them and they haven't done anything. But yeah, okay. Thank
Exactly
you.
that.
I'm gonna. I didn't do any research. I didn't know any of the things you just told me, so I appreciate that.
Yeah, of course.
Thank you.
No, it's all good. Thanks for hanging out. With that said, you guys, we've gone mad over time, but I still do want to hear what's on your watch list, and we'll do some affirmations and call it a day. It's nice to come back here and do the thing. So, Liv, what's on your watch list for today?
I'm trading right now. Just Apple, I guess.
You too, huh? I
Yeah.
like that. Yeah, that's two for Apple. Christopher, what's on your watch list today?
Apple.
Shut up, you guys. I called it first. Pick something else.
Well,
Trade something new.
if we don't gotta do entries and exits, I'm looking at Microsoft and Facebook.
Can I tell you what I'm watching for the day too?
Yeah, sure. We'll take it. I want to hear from everybody.
Apple.
Okay, I'll say this. There were two plays. I entered into an Apple trade last Friday, actually.
Oh my.
Um, I I know. And second, Mara. I actually decided to hop into a marathon call yesterday, like without telling anybody. And oh God, I'm really happy to see this Bitcoin price action. I was playing it off of the Coinbase IPO and kind of expecting to see some action. And I loved the hold on the Bitcoin chart at 60 and 59. It turned into a nice little high base consolidation that I was excited to see. So this breakup is nice. And yeah, I'm really into this right now,
Oh my.
and I'm into it as we continue to move through the day. Um,
I'm sorry. I'll change mine. Please Tesla 700 calls. Elaine, please tell me you hate money. Say it.
no, it's not
Say it.
about that. I don't trade Tesla, dude. And like honestly, the options chain on Tesla is fucking juiced, man. It's just juiced
Okay.
in terms of money per delta. You could find other options that will give you the exact same amount of return, if not better, without having to pay such high premiums. There's a reason why I don't trade
I
Tesla.
thought you,
Like, hmm?
yeah, I thought you asked me like a week and a half ago if I was getting in. I got in, and I thought you did too. I didn't know you weren't playing it.
No, I don't. I avoid trading Tesla for the most part. Like it's not the best stock to trade. It's like not even top 50. Like it does give you great price swings for sure, but like I don't know. Yeah, I just also, you guys, you know what? I have a lot of emotions about Tesla, and I don't do well trading stocks that I like. I want Tesla to pull back to 250. The trades that we've both enjoyed, I think, have been ones where I was looking at the downside. And that's a problem for me too. Like, you can't trade stocks that you have too much emotional cachet in, because we're not getting paid to, to be emotional. We're getting paid to be right. But with that said, yeah, Tesla at 720 first thing in the morning is great. Nano Dimensions, looking up at almost 4% right now. God, she's sitting at $7.62. This thing is at a complete
Yes.
discount. It's insane.
Ah.
Liv, the sounds you make when you're trading are ridiculous. Along with Tesla, XPEV, whenever we see Tesla kind of price action move, XPEV happens to be the one that I continue to trade. So we're looking at XPEV at 3.18% right now, a higher actual percentage of growth than Tesla. You guys, much cheaper on the options chain if you are trying to play the EV thing. Like, XPEV is the one that I tend to play when Tesla runs, and percentage-wise, it is doing better, and it is extremely cheap compared to Tesla. Daniel, what are you looking at for the day, man? Yeah, that man's neck deep in trades too. Cassie, you have anything that's on your watch list for today?
Good morning. No, I'm not really a trader. I'm more of a long-term investor. So I'm kind of holding right now, watching my Blue Sky Digital. It's up like 21% right now. So super happy with that. But already bought in. So just kind of holding today and waiting to see how much of that percent it holds. But not a trader. So nothing that I'm really looking at buying into today.
No, that's fine. We love it. I mean, you know what? Not everybody has to be a trader. I love watching stocks and seeing when the opportunity comes. So you're not you're still amongst friends, Cassie. Fahim, anything else you're looking at for today? I see you took that Tesla position when she was back down at 620 it was at, like, last week.
Yeah, I just got into Apple because of you guys.
Do not do your own duty. Yeah, we're enjoying this Apple price action for sure, though. God, I'm enjoying this Nano Dimensions price action as well, though. And last but not least, Stocky, aka Rev. What are you looking at for the day? Alrighty. Well, there's no need to drag this out. I know that sometimes we do live trading, but I don't think I want to do that today. I think I'm just going to hold out. I mean, I have these two positions that I already took. I want to see how they play out as well, and I'm not going to be active and jumpy. Although, if I was going to jump into anything, I think I really like this Nano Dimensions price action. I'd love to see it find a bottom. I mean, we've definitely hit this bottom at 650 before, and we could do it again. Maybe I'd like to see it break at least over like $8 actually before I really hop in there. But I'm really liking to see the 3D printing sector heating up, if I'm going to be honest. I think there's a lot of value inside of that. And then outside of that, some of our like Jumia, another stock that has just been on a complete discount, but it seems to have found like a double bottom at the $30 level. So the question is it going to hold over 34? I might look to enter into that one as well as time goes on. But I really just want to see how this shakes out, because we're at a pivotal point in terms of every single index and being near all-time highs. And it's like if we continue to push all-time highs, I expect a lot of the growth traits to continue moving. But if we don't, and we kind of do the volatility consolidation dance, which I fully expect to start happening any second, then hopping into a growth trade, something that has unlimited upside, is potentially not the right move. And some of these companies are just beaten to hell right now as well on the price action. Anyways, with that said, you guys, let's do some affirmations and get the heck out of here, and save some time for tomorrow. I am now, I have always been, and I will continue to be a profitable trader and investor. I'm ready to trade, and I have a plan for all of my trades. I will trade to that plan and treat it as my religion. I will respect my stop losses. and I will always protect my principal. I love the market, and trading profitable is what I excel at. I believe in my ability to deal with market volatility, and I am ready to react, to whatever the market gives me. I will not trade based on emotion. I will trade with the trend. I will have a great, beautiful green day. And I'm grateful and happy for this opportunity to be in the market and to make generational wealth, not for myself, but for the people that I love and care about. Thanks so much for hanging out with me today, you guys. I can't wait to do this Benzinga show. Really, if you guys have trading stories, please send them in. I can't wait to kind of talk about it and do like a deep dive on some people's trading psychology. And yeah, I hope everybody has a really great day. This is Stockhouse U, and we're out of here.
All right, y'all. Have a good one.
Good luck trading, everybody. Let's go.
That's the loudest I've ever heard him be.
Have a blessed day.